Good morning, everybody. Welcome to this Thursday morning game plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. We got some jobless claims numbers today. They came in higher than expected. Those are people filing for unemployment. We also have some market movers. Obviously, we're going to talk about Nvidia. We'll talk about Bitcoin, the commodity sector as well. There's lots to go over. On that note, let's get started right away. All right. No time to waste today. We're going to get right into the action. So basically, this is the pre-market action on the S&P 500 here. Basically, if we zoom out, we can see that in general, it's not that volatile. When you zoom in, it looks volatile, but it's not. Volume today likely going to be a little quieter because, yes, we got the jobless claims numbers, but really what do investors and traders care about? The non-farm payrolls and unemployment report that will come out tomorrow morning. So here's where we closed yesterday right up here. Basically, what does it look like? Sideways chop, right? Really no major bias here up or down. We do have Nvidia trading up just a little bit on the day, about 1%. The kicker for Nvidia, though, today, where it currently is trading, it will likely be above that key level that will make it the most valuable company in the world by market cap. And again, that'll take over from Microsoft. It surpassed Apple yesterday, and today, as long as it holds where it is, it likely will take over from Microsoft as the number one. By the way, in terms of where this was a year ago, 2 years ago, incredible meteoric rise. It was one of many semiconductor companies. Now it's zoomed all the way to the biggest market cap in the U.S. markets. All right, so here we have the action. You can see here we had the little bit of a dip on the jobless claims, very small little drop. Just to go over, markets had expected a 220,000 number. Again, these are people filing for unemployment in the past week. The number came in at 229,000. So it's not a huge miss. It's not a hugely higher number, but it is showing the potential for a change in trend. And what do I mean by this? Well, if you go back 2 months ago, the numbers were consistently basically between 205 and 215. All right. Now we've seen a couple weeks ago, it was 231, I believe. Then we kind of went back to 220. Now we're back to 229. There's definitely a little bit of a general uptick in these numbers on a consistent short-term basis. My guess is this continues to rise as we see overall economic conditions weaken. Okay, so again, just a little insight into that data that was released this morning. Very minimal impact as we see right here. Now, quickly, I do want to check in on the 10-year yield. The 10-year yield had 5 consecutive down days in a row. 1, 2, 3, 4, 5. Small bounce today. Maybe a little bit of short covering there on the yield side going into that jobs number tomorrow. I think in general, you look at this bigger wedge pattern. And again, I'm not going to zoom out to see where it starts, but you guys get the point. It consolidates until price is forced to break either down or up. And in this case, it broke down. It's confirmed. So in general, what does this mean? Well, any sort of move back here, that's your shortable level, right? So that would be a retrace to the scene of the crime, the breakdown point for a leg lower. And I still have my price target on the 10-year yield at around 3.9%. The key is most people look at this and they say, oh, when the economy weakens, interest rates will go back to 2% or 1% or even 0 like during COVID. I don't believe that. I think you're going to get sticky interest rates, probably between 3 and 4% on the 10-year, because ultimately inflation is going to remain sticky. Everyone was laughing at me when I said, hey, when we were at 9%, I said, we'll come down to 3%, give or take, but then it's going to get sticky around 3%. What happened? That's exactly what happened. And again, it was just me connecting the dots. It's really just looking at the data, understanding past situations like in the 70s and what ended up happening, and then ultimately concluding what the likely most probable scenario is. Okay. Next up, let's take a look at the NASDAQ. I want to show you this, guys. This is a pretty cool trend line. And again, just to be clear, the market is in this phase of euphoria, so it doesn't mean it's necessarily going to hold up, but it is a level I'm watching. And again, if we take, this is the COVID low down here. So this is the 2020 low when basically people were thinking the world was ending. And what we see is if you take a trend line here, it connects through this high. So we broke down, we did a classic retrace to the scene of the crime and then a pullback, right? And then we continued up, we kissed it in this range, hit it here, and we're back into that level right here. So interesting to watch this trend line. The reason why a trend line like this is more important than, let's just say, I mean, you could easily connect, you know, this low and this low, right? And yeah, I mean, that's a good trend line too, but the longer back a trend line goes in technical analysis, the more important it is, right? So when you find a trend line that goes back to like the 1970s, that's much more powerful than even a trend line that goes back to 2020. But a 2020 trend line is more powerful than a 2023 to 2024 trend line, right? You guys get the idea here, is that essentially the longer a trend line goes back, the more power it holds. Think about it as it ages and gets stronger and stronger and stronger. Okay, so that's where we are at this point in time. Looking at a couple different things here. Let's go to the Lulu chart this morning. Lulu I covered in yesterday's Trading the Close, had a big pop on earnings here. It has kind of faded a little bit, but remember, stocks that are at their lows in recent history, especially in a market that is kind of this animal spirit type market, at least with probabilities, the probabilities favor a upside move. Now, again, is it high enough for me to buy Lulu? No, I didn't buy Lulu going into earnings. But if we zoom out on the chart, you can see this stock was trading north of $500 in 2023, right? I mean, this was $500 in the end, in December of 2023. So we're talking 6 months ago, and it had fallen all the way down to $300 here going into earnings. So that's a big fall going into earnings here. All they had to do, and essentially, you know, like Nvidia's bar for earnings is like way up here. They have to just plow through those numbers, and they did in the latest quarter, plus the stock split, etc. But you have a Lulu that's been beaten down. The bar is like down here, right? It's really low for them to just step above, and the stock can rally. And that's essentially what we're seeing here on Lululemon. Are there tradable levels? Stocks that have been beaten down like this, you have to worry about a short squeeze, so you have to be very, very careful in that respect. You do have a little bit of a level here maybe, right around 370, give or take. But for me, as of now, I have to watch the daily action intraday here to see if there's any sort of additional signals that might get me interested in a short. A retailer that is getting crushed here is this FIVE, guys. Now, what's amazing about this is if you watch Trading the Close, in Trading the Close, I said, guys, there's key major support at the 110 level. Well, guess what this low right here was? It was 110. In the after hours, you got about a $3 bounce or 3% bounce off of that. Now, since that bounce, it's kind of consolidated and then gone a little bit lower. So that level for me, 110, is already played out. It already played out. As a trader, you're looking at these levels in the after hours. You play them, you grab your money, and you run. Now it's moving lower, so we look for the next level to the downside. Now, if we flip to the daily chart, we go to these levels here, and we see that, okay, this was your 110 level right down here. That's why I had that 110 level after hours. It worked. All right, we got a little technical bounce there. Then what is the next level there? So the next level for me on this chart is right around 97-ish, give or take, right? So if we look at this, we can see that there's a gap window here. There's a pivot point, kind of cuts through here, then it hits right there. So that tells me, again, this 97-ish level, if it falls there, might be a level for a technical bounce. And again, we're talking short-term trading here, not like where would I buy this as a long-term investment. To be honest, I have no clue. No clue whatsoever on this chart for a long-term investment. Who the heck knows, right? Think about JCPenney. JCPenney was one of the most dominant retail companies for the last, 50 plus years, 100 years, and look at where it is at this point. Same thing with some of the other ones. So longer term, I don't even pretend to know, guys. Shorter term is what I thrive on and what I can find in the technical charts. All right, a couple other charts here I wanted to show you. This is a chart of Sienna. Now, Sienna is a networking stock, at least that's what it always used to do. This was one of the big players, and they reported earnings. You can see it's up a little on earnings today. I mean, it's not a big mover. It's not a big company anymore. The reason why I brought this up is because Sienna was in the dot-com bubble one of the key core components. So you had Cisco, which was at the top. Cisco Systems was the Nvidia of that time. Then you had Sycamore Networks, you had JDS Uniphase, you had Lucent, you had Ciena, you had all of these other companies that came in and were competitive later on after Cisco was the dominant force. Now, we know Cisco never ever got close to those previous highs from the dot-com era. Even though Cisco Systems is still a behemoth of a company today, it's not nearly what it was back then. If we flip to this chart of Ciena, and we zoom out, let's go to the monthly, in fact. Let's just go back to the dot-com era, and I just want to show you guys this. It's just food for thought. But basically what we have here, this was your dot-com run on Ciena, and then look at since then. All right? Pretty remarkable, right? All right, so again, you look at that. We could go to Cisco Systems here, CSCO. There's your dot-com bubble there. At least this one's fared a little better trying to get back to it, right? I mean, it's gotten back to it here, but there's your dot-com move. And again, did the internet change our lives? Heck yeah, it did. I mean, unbelievably. But at the same time, these type of moves when competition, and that's my thesis, right, is that we have to understand with Tesla, competition came in. Look at Tesla stock. Cisco Systems, competition came in from JDS Uniphase, Lucent, and all these other names that I mentioned, Ciena, and this is the result. Now, just a little thing I'm seeing in the chart here. Do you guys recognize this pattern right over here? Let's do a little quiz. I love giving you guys quizzes on these game plans, is that if you zoom in on this, what type of pattern formation is that? All right, Jeopardy music cue, whatever, blah, blah, blah. Look at that. That's a head and shoulders. So at least, not that I'm paying attention or trading this at this point, but that's a head and shoulders. This is your neckline approximately. So that's actually a bearish pattern on Cisco Systems developing on the monthly chart, which is more dominant, obviously, than the shorter term. All right, so anyways, I wanted to quickly go over that. When we look at Nvidia, we can see that Nvidia today is trading up around 1239. It's up about, I think it's about 1% or just over 1%. The one thing I'm just paying attention to is you do have this channel here. So if we look at and we connect the lows from January to the lows here, right, 2 hits right here, and then you connect through this high, you did pierce here. Now we'll open above it, but just something to watch today just in case it reverses. We can obviously check back in on this, but in terms of resistance, there's not much you can find without going to a logarithmic chart. But this channel, again, you are at the high end of the chart there. All right. Lastly, I just want to show you a couple, or at least we'll just look at this one. This is Baidu, which is a Chinese stock. I actually like the chart on this. And what we can see is you have this wedge pattern, right? So classic wedge pattern. And you can see the low starts all the way back in 2022, kind of comes up right under here, right in there. And then you have all these highs. Look at this, all these highs here. And then look at the breakout that occurred. Now I'm going to zoom in on this so we can see a little bit more clearly of what ultimately happened. But this is where I start to like these charts, is you get the breakout, right? So here was your breakout. And then it does a classic, what I call the retrace to the scene of the crime. And it comes back in, and then you have the underbelly line dissecting right there with price, with the downsloping retrace to the scene of the crime. And the idea is there's your start to a bounce. My guess is it should go further to the upside on this stock based on the breakout retrace to the scene of the crime. But those are the types. I never really, to be honest, I'm not one that buys these breakouts up here because the stock, again, had already gone from here all the way up here, and then it broke out. And it's like, well, I don't like paying up from that. That was 94 bucks, and I was going to be paying like 100, 102. Granted, it went up to 114, but I'd much rather wait patiently for that retrace, get in at 94 again or 95, and get a much better entry on that after the breakout. Now, is it sometimes they don't retrace? Yeah, sometimes they don't. But there's so many stocks in the world, so many cryptos, so many commodities, that there's always something to find that looks good. And again, just a little quick lesson there. All right, guys, we're going to do our quick drawing here for the, I think it was 3 months of Smart Money Crypto, a subscription to that. And again, we're going to do our drawing here. And as always, folks, Smart Money Crypto just crushes it. If you're into data and you want to ignore the hype and all the BS that's out there, this is where it is, folks. I analyze the charts, 2 videos every single day, morning and night, my time analyzing all of that. AI stock trading 2524, easy name for me today, that's for sure. So in any case, Check out Smart Money Crypto, as again, I already did a video, I already posted it, went over the big names, the portfolio positions we have, and so on and so forth. But this AI stock trading gets 3 months free of that service. And remember, email Lawton at verifiedinvesting.com. He'll take care of you and get you all set up. And for those of you that are looking to participate and be able to win this or other prizes, and we're going to spin the wheel in just a second, all you have to do is share this stream on one of your socials and then just post under the comments either on X or on YouTube where you shared it so we can verify it, and then you're entered to draw in the next drawing. All right. On that note, let's do a quick spin here of the Wheel of Appreciation, which again, folks, remember, I appreciate you guys. We here at Verified Investing do, and that's why we put this together, to give away stuff every single day. All right. Very cool. Look at that. So 300 credit on VI, guys. A $300 credit on VI. You can use that to anything on VI. And again, we will do that drawing today. I'm going to put this little marker so we can easily remember it on that as well. But that's awesome, guys. Now, before we get into crypto, I want to take 30 seconds to go over the 1-minute scalpel for you guys. This is Dr. B's amazing course. And again, it is mind-blowing, and he has a few words he wants to share with you guys that are interested in this course. So let's take it away.
Welcome to Verified Investing. I'm Dr. B here, and today we're going to be talking about the 1-minute scalpel. This is a course that I've developed over several years, and really what I do is I start with the basics in this course: support and resistance, trend lines, moving averages, and we start in the daily, weekly charts. We zoom in a little further to the 1-hour charts, and then finally to the 1-minute charts, which is my preferred time frame that I use here in the Apex trading room. Had about an 80% success rate using this strategy. Rising wedge patterns, falling wedge patterns, parallel channels, all of these different techniques. And from there, then I teach how I maneuver through trades that go against me. I talk about where my stop would go, where I would add to a trade that has gone against me, and really over time this has helped position me to have an edge in the stock market. I hope you enjoy it as much as I do. Take care.
All right, guys, we are back. So here's your Bitcoin chart. Bitcoin is basically flat on the day. Notice how you had this nice little curvature, and again, I've been dead on this chart as it was curving up. I do want to alert you that we are into resistance, and I gave you guys this heads up that this would be resistance days ago. And basically what you have is you have this pivot top, but also if you take the all-time high here, connect it to this high, connect it to this high, this downsloping line is short-term resistance. Now, it's not major resistance. I wouldn't say this is like a massive wall of resistance, but it is a level that may stall price out just a little bit for a little bit of time. Now, as if you're a bull, this is fine, right? I mean, sure, no one wants to see resistance, but resistance is part of investing and trading. So what you're looking for here is you want to see bullish consolidation off of this level for just a few days. I mean, it could be as little as 2 or 3 days. If you get that, it favors a strong breakout to the upside and at least a test of 74,000. Now, if you're a bear on Bitcoin, let's go over the bear case. What would the bears want? The bears want to see a sharp rejection of this level right back to this support level. Once you get back there, then the bears are basically looking for a daily close below there, which would open the floodgates to potentially going all the way down to 52,000. All right, so again, I like to present both sides of it. Which side, again, will ultimately be in favor? Well, per probabilities, the bulls still have control here on the chart. But that's simple TA, and in general, as a technician of the charts, you want to be looking at both sides, and then you make your determination on how you want to trade it or if you want to trade it. You don't have to trade it. Remember, folks, there's nothing wrong with sitting on the sidelines waiting for a better setup. All right, here you have a Solana chart, guys. Solana continues to be just chopping. It's had a little bit of an uptick, but what we find ourselves in, again, you had this kind of sideways channel developing. You broke above it, then you broke below it. We have all these lows here. We hit the high here, so this is resistance up here. Any sort of downside move, you'll have support right in this white trend line. Bears on the side of Solana would want to see a break below this. You break below this, you probably go back to 120 right here. Bulls want to see us attack this upper line here, which is around 200, which also is very close to the all-time high. And then if this can get broken up here and the all-time highs get broken, then it's off to the races. In terms of the bias, probability-wise, to be honest, there's really not much of a bias here. It's a neutral. So while Bitcoin is favoring the bulls, Solana is kind of just neutral. It's just hanging out. It's not at least giving me any signals on probability, which is heavily favoring one way or the other. Okay, next up, let's go to gold. We'll talk some probabilities on gold's price action. And basically, gold just continues to do its thing. I mean, it goes down one day, goes up the next day. I mean, you can see red, green, and then today was up a little bit, but it's come back in and is still holding steady. The one thing I'll just make a point on, if you're looking for probabilities on the short term, this is still a bearish chart. Mid to long term, it's still broken out, so it's a bullish chart. And this is another very important point, is that charts can be short-term bearish and long-term or mid-term bullish, while they could be the inverse, right? They could be short-term bullish and long-term mid-term bearish. So just understand, time frame actually does matter. Now, looking at the chart here, what do we have? Well, we have a line right at the lows, and basically right here too, right? So you're consolidating. This is that classic bearish pattern of consolidation that we're continuing to watch, and this chart in the short term right now is bearish. Okay? Silver, it's kind of the same thing. It got back above $30 after closing below a couple days ago. To me, I'm starting to think that this might be a channel developing. So if we connect these lows right here, and I'm just going to draw it on, but you guys can get the vibe here. So you're looking at this, maybe this, maybe this. This is my zone to be a buyer here. You have an upsloping trend line here, right? And so this is going to be support, and then if you have this channel, which downsloping channels, usually probability eventually break to the upside. The concept here would be maybe this is that double factor buy level where the two lines cross before that next move to the upside on silver. So I'll continue to keep you guys updated, but that's what I'm seeing at this point in time. And then if we look at oil, guys, oil has broken down. It is getting a small bounce, which is normal, right? 1, 2, 3, 4, 5 down days due for a little bit of a reprieve. We got a little bit of more okay data on the economy yesterday, which helped lift oil up just a little bit. And then basically, if there's no trade here, if you're not in at this point, in my opinion, but if we go here, this is a short, a retrace to the scene of the crime. And then if you continue down, the $68 to $70 level is technical short-term support, and that would be a buy. But right now, this to me is a no-touch. It's just in no man's land between major resistance and major support. Lastly, natural gas beginning to climb up. Remember, I took my profits on the shorts on that move down. Now we're starting to climb back up, which is fine. I might be convinced to re-short up here, but I'm going to analyze the chart and just see. And then really what you can do now is you can create a new trend line here from this low to this low, right? So we can do this. And then if price breaks, like let's say price goes like this, if it breaks here, then you get your bigger move down into that level. So again, as a technician, always remember, we look at all sides, and then you have to formulate an unbiased opinion based on what the charts are saying to let you know, is there a short, is there a long, or is there nothing to do? Right now, there's nothing to do for me on this chart. It's not into resistance, it's not into support, it doesn't have a bear flag, it's not, there's nothing really there, and that's okay. Because again, having dry powder is always helpful when the opportunity does arrive. All right, guys. As always, don't forget, share this stream around, share your friends. Again, I really try to do as much education as I can in here so that you guys learn the keys to technical trading. I do think it helps you guys. I know it helped me grow up and kind of learn how to trade the charts. But overall, this is where it's at, guys. And share it and make sure you follow Verified Investing on YouTube as well as on Twitter or X. Have a wonderful rest of your day, guys. I'll be here for Trading the Close today at 3:55 p.m. We'll cover all the market action. I'm sure there will be some. Have a good one. Take care.